Sam, how you going to plead this morning, guys, today?
I gotta get in. I gotta get in.
Guys, that's it.
Hey, everybody. It's Eddie from Tokyo. This is your cryptocurrency update from Japan, and the article by Jacqueline Malinik of TechCrunch said that this guilty plea that Sam Bankman-Fried put forth was a smart play. Mary Beth Buchanan, a former U.S. attorney that advises blockchain companies now, says it's quite common for that initial appearance because it keeps your options open. It doesn't give the government an edge. Wait it out. A deal can be made later. And now we have the judge that has approved a request to keep 2 of the names that are backing the bail bond hidden from public. It was in this 6-page filing that Sam Bankman-Fried's attorneys expressed their concern that the 2 people who are backing this might suffer harassment and physical harm. The federal prosecutors also made no objection. Well, there's quite a bit of speculation as to who these 2 could be, because obviously they have some skin in the game, possibly trying to keep something hidden themselves. In this video, we're going to look at a very interesting email interview that took place with Raul Advani. He is part of the Ripple team when it comes to public policy in the APAC region. Ripple's strategy, also some updates on ODL. It's good. It's really good. And also, I asked Uphold yesterday, what is up with the halting of trading for Songbird? And Songbird was having some really good price action, and they halted the trading. I did get an answer on that. And a lot of people are retweeting Matt Hamilton's tweet where he said, hey, come on, Eddie, it's all complete fantasy. There's no scenario in which a buyback makes any logical sense. Well, I can tell you that I'm still going to continue to collect questions for the XRP community that have not been answered in any of the videos by the supporters of this scheme. And I'm not interested in the price. It's not the price. I mean, you can come up with any price you want. I'm interested in the mechanics of this buyback. I'm talking about the proposed NFT receipt of the transaction. I want to know which blockchain. I want to know the refund process should the deal go south, etc. That is what I'm interested in, because those questions are not being answered. Now, I'm giving them all the benefit of the doubt that they're still trying to figure that out, but you can expect that I will keep asking those questions. And for people who are in the Stellar ecosystem, today is not such a good day. They have lost one of their big anchors, and that would be wire payments. I think they put something close to $3 million into this project. And unfortunately, Wire has announced that they are going to shut down operations. It's a big loss. There was a lot of hope that they were going to bring some significant activity onto the Stellar network with their blockchain payments. But yeah, they're going to have to go in search of another big anchor. With the price activity of Songbird yesterday, it was a little bit of a surprise that the trading was halted on Uphold. I asked Dr. Martin Heisbach about this, and he said that when you trade, you are shown a price, and if they can't guarantee that price, well, they don't want you to have to overpay, so they halt the trading. Nothing out of the ordinary. Kumo challenged this answer and said, okay, so Uphold was low on Songbird to sell as in your off-market stock, and going on to say that the market makers could keep up with the quick movements, and he'd not heard of this before. But this is where it gets interesting. He said that we are not low on anything. We are not an exchange. We do not buy or sell without clients' orders. So he is saying that technically speaking, they are not an exchange. I then highlighted this video, which is with Jack McDonald of Polysign. You know, Polysign is not a secret company. If you do your research, you'll find exactly what they're doing. And they're pointing out how the professional custody will most likely be segregated from exchanges in the future. And then Dr. Heisenbach replied that he agrees and that we, being Uphold, are set up to separate the two from inception. Now have a listen to the short Polysign clip.
And it's why we set up our business to be exclusively focused on custody and not have a complementary, quote unquote, markets business that trades and makes markets and lends and borrows and rehypothecates client assets, et cetera. Chairman Gensler here at the SEC has been vocal about the importance of segregating those duties. And we believe that that is certainly going to come home to roost as regulation comes into this space. Cryptocurrencies are bearer instruments, and the technology required to protect those is really the crux of what many of us in this industry have built in terms of our technology offering. Because it's of a digital nature, it's open to all sorts of threat vectors that you articulated. You've got a alphanumeric key that is your proof of ownership, and what we do is shard that key up and secure it in a number of different ways: biometrics, blockchain technology, hardware, software, et cetera, and keeping that safe. Well, I just want to add a very critical distinction here, Dominic, to that point is global custodial banks. Let's just take a BNY Mellon or a State Street. Yes, to Liz's point, they offer custody, trading, collateral management, et cetera. However, they're not exchanges. That's the big difference here. Coinbase is an exchange, and I'm not speaking ill of Coinbase, but they're an exchange and a custodian. Gemini, an exchange and a custodian. Binance, an exchange and a custodian. I think there's a consensus view that cryptocurrency may or may not, which might sound oxymoronic, but may or may not have a future role to play. But stable coins, yes. Tokenization, yes. Underlying technology that will have a profound impact on the operating system of capital markets going forward, yes. And so these organizations are building infrastructure anticipating that, and it's much less about whether or not Bitcoin and Ethereum have a meaningful long-term place in an institutional client portfolio.
Before we jump into some key parts of that interview that took place with Raul Advani, who is the policy director in the APAC region for Ripple, let's just jump into the fluff briefly, because today the New Year tuna was auctioned off, and this is an interesting tradition. It kind of sets the mood and tone for the business year. If it has a high price, then people are feeling very optimistic. If it's a low price, then of course it has the opposite effect. It was caught off the coast of some very cold waters of Aomori on a boat probably very similar to this. Today's price was double what it was last year. The auction took place in Toyosu at the new Tsukiji market, which you see pictured here, and it sold for a little over 276,000 US dollars. It weighed in at 212 kilos. Its final destination ended up in a kaiten sushi located in Ginza called Onodera. I'm going to read for you some of the key parts of that article that was published in Forecast. We're hoping to see the judge's decision in the first half of 2023. The SEC is not looking to apply the law. They're looking to remake the law in the hope that it can expand its jurisdiction. We hope that the resolution to the case will help bring about the much-needed regulatory clarity for the U.S. crypto sector. It's certainly been a turbulent year in both the crypto and financial markets. Ripple has been around since 2012, so it's not the first time we have encountered a downturn in the market, and frankly, it won't be the last. We've always been focused on building around utility, and we believe that real crypto use cases will be able to withstand the test of time. Despite the market conditions, we have continued to see massive growth and scale at Ripple. In fact, 2022 has been our strongest year as we enter new markets, bring on new customers, and grow our global footprint. Through RippleNet, we have processed millions of transactions worth billions of dollars, and we've seen our payment volume run rate exceed US $15 billion for the year. Our on-demand liquidity ODL solution is now available in nearly 40 payout markets, representing about 90% of the daily US 6 trillion FX market, a significant milestone towards global coverage. APAC, the Asia Pacific region in particular, has been leading the way as one of the biggest contributors of ODL dollar volume. We've introduced products like Liquidity Hub to help businesses source crypto liquidity on demand across a number of crypto assets. One of the latest customers is Supermojo, a checkout and financing platform designed to make digital assets and non-fungible tokens, NFTs, more accessible. We have been supporting the crypto ecosystem since 2015, and we've invested in about 60 companies and funds totaling $500 million. Events in 2022 have underscored the urgent need for additional safeguards to protect crypto retail investors. In the new year, we can expect to see jurisdictions around the world working to finalize crypto asset regulation framework. By the end of 2023, we expect to see most jurisdictions with broad crypto asset legislation on the books. When digital asset markets became more active around 5 years ago, regulators addressed money laundering and terrorist financing risk as the key areas of concern. However, with the rapid growth in scale and complexity of digital asset activities, other risks have surfaced, as we've seen with the events like FTX. With that in mind, we expect that regulators will increase their focus on consumer protection, retail investor safeguards, market integrity requirements, and business conduct requirements during 2023. Additionally, I think we're likely to see more consolidation in the crypto space. This is a positive sign that the industry is maturing. What we're seeing today has parallels to the dot-com bubble, where there was rapid growth in the internet-based companies followed by a sharp crash. Yet, we can't imagine a world today without the internet. In 2023, I think that more companies will turn their focus to unlocking real use cases, while players with questionable fundamentals that rely on industry hype cycles will likely exit the market. I would argue that this is a crucial step for the long-term health of the crypto sector.